Exam Scholar, Real Estate Edition.
Question 1. What is the function of the FHA in regards to loans? A. The FHA loans out money. B. The FHA loans out money and insures loans. C. The FHA insures loans. D. The FHA pre-qualifies potential applicants. Answer. C. The FHA insures loans but does not issue loans. Question 2. If Ronald owns a parcel of land that he has converted to a self-sustaining farm complete with a fence surrounding the property with no trespassing signs posted, he is able to enforce this notice by which right? A. Right of solitude. B. Right of ownership. C. Right to exclude. D. Right to dispose. Answer. C. Ronald has the right to exclude because it is one of the rights bundled into the legal rights of ownership. Question 3. A valid tenancy at will can be created between lessor and lessee in which situation? A. An oral agreement to lease for 2 years. B. An oral agreement to lease for 3 years. C. An oral agreement to lease for 6 months. D. An oral agreement to lease for 5 years. Answer. C. As long as the lease is for a time frame of 1 year or less, a valid tenancy at will can be created orally. Question 4. Seller financing in regards to a loan is also known as A. Legal. B. Purchase money mortgage. C. Balloon loan. D. Cash price negotiator. Answer. B. A purchase money mortgage is also called seller financing. Question 5. If Greta's potential home purchase lies within a flood zone and she wishes to receive any type of federal mortgage loan, she must also purchase A. An environmental hazards impact report. B. An environmental hazards blanket insurance plan. C. Flood insurance available from the federal government. D. A watershed insurance plan. Answer. C. Flood insurance must be carried if the property lies within a flood zone. This type of insurance is available from the federal government. Question 6. When Jenny and Max sign the document that includes the price and terms of the property of which they are ready to buy, they create A. An option. B. A purchase agreement. C. A purchase offer. D. A listing. Answer. C. Until a seller accepts their document that includes their terms and price, it is considered a purchase offer. Question 7. An oral agreement to lease a house for 2 years for a monthly lease rate of $1,250 comes under A. The legal rights of leasing. B. The statute of frauds. C. The articles of incorporation. D. The statute of lessors. Answer. B. Under the statute of frauds, any oral agreement to lease for a time frame of more than 1 year is not enforceable. Question 8. An agent working under a broker is offered a new barbecue grill by a seller they are working with if the agent can produce a buyer by the end of the month. The agent does produce the buyer and the seller wants to give the agent the barbecue. What should the agent do? A. Accept the gift graciously and thank the seller. B. Inform the seller that it is not legal to receive such compensation from anyone except the broker. C. Offer to come pick it up at a later date. D. Decline the offer because of the health effects of burned meats. Answer. B. Only the principal broker may give out compensation. Compensation can come in the form of gifts, merchandise, vacations, money, etc. Question 9. The right to occupy a property for a specified period of time without outside interference is known as A. Squatting, B. Leasehold, C. Estate for years, D. Possessive acquirement. Answer B. A tenant has the right to enjoy the subject property for the duration of the lease, leasehold. After the expiration of the leasehold, the rights revert to the owner. Question 10. A landlord is allowed to access the premises unannounced in which they own for A. Any reason. B. To make necessary repairs. C. In case of emergency. D. None of these. Answer D. A tenant is allowed the right of quiet enjoyment of a property while under lease, and the landlord must give proper notice before accessing the premises. Question 1. Delinquency in real estate terms means A. A failure to pay mortgage payments on time. B. Failure to notify by recording of the deed. C. Failure to provide required disclosures. D. None of these. Answer A. Failing to pay mortgage payments on time creates delinquency of the loan. Question 2. A credit repository is A. An organization that gathers, records, updates, and stores financial and public records of individuals being considered for credit. B. The institution that issues a FICO score. C. TransUnion. D. None of these. Answer A. A credit repository is the institution that gathers, records, updates, and stores financial and public records of individuals being considered for credit. Question 3. Real property where all the owners own the property, common areas, and building together but with the exception of the interior of the unit to which they have title is called A. An apartment complex. B. A condominium. C. A planned development. D. A homeowners association. Answer B. This is the definition of a condominium. It is a type of ownership. Question 4. An additional individual who is both obligated on the loan and is on the title to the property is called A. An agent party. B. A co-borrower. C. A partner. D. A borrower in trust. Answer B. A person that is added to the loan becomes obligated for the loan and is also on the title to the property is called a co-borrower. Question 5. The certificate of reasonable value is issued after A. An appraisal of a property being bought with a VA loan. B. The sale of the property being bought with a VA loan. C. An appraisal of a property being bought with a conventional loan. D. The sale of the property being bought with a conventional loan. Answer A. The certificate of reasonable value is issued by the VA on a property after an appraisal has been issued if the property is being bought with a VA loan. Question 6. If a property is being evaluated for tax purposes in regards to its value, this would be called A. An assessment. B. An appraisal. C. An estimate. D. A county recording. Answer A. When a property has a value placed on it for purposes of taxation, this is called an assessment. Question 7. The Veterans Administration is an agency of the federal government that A. Guarantees residential mortgages made to eligible veterans of the military services. B. Issues loans directly to veterans. C. Protects veterans against loss in the housing market during a downturn. D. None of these. Answer. A. The Veterans Administration is an agency of the federal government that guarantees a lender against loss on loans made to eligible veterans. This encourages lenders to make more loans to veterans because it is guaranteed against loss. Question 8. Disputes over the ownership of a property can be protected against by purchasing A. Lender's insurance. B. Title insurance. C. Conveyance insurance. D. Deed insurance. Answer. B. Title insurance protects the lender or the buyer against any loss arising from the dispute over ownership of a property. Question 9. If a lien has a lower priority than the first mortgage or lien, this would be known as A. Subordinate. B. Under. C. Inferior. D. Underprioritized. Answer. A. Subordinate financing is any lien or mortgage that has a lower priority than the first mortgage. This means that any creditor would be paid on the first mortgage or lien before all others. Question 10. When a loan is backed by security or collateral, it is called A. A secured loan. B. A protected loan. C. An insulated loan. D. A collateral loan. Answer. A. A secured loan is any loan that is backed by collateral or security. Question 1. An arrangement made to repay delinquent installments or advances is called A. Repayment plan. B. Settlement plan. C. Debt installment notice. D. Debt division plan. Answer. An arrangement made to repay delinquent installments or advances is simply called a repayment plan. Question 2. The amount of principal that has not yet been repaid is called A. The balance. B. The remaining balance. C. The outstanding note. D. The loan remaining. Answer. B. The remaining balance is the amount of principal that the lendee has not paid yet. Question 3. The process of paying off one loan with the proceeds from a new loan using the same property as security is called A. Refinance transaction. B. Resettlement transaction. C. Redouble transaction. D. Loophole transaction. Answer. A. This type of process is known as a refinance transaction. Question 4. This type of deed transfers without warranty, whatever interest or title a grantor may have at the time the conveyance is made. A. Quitclaim deed. B. Warranty deed. C. Trust deed. D. Special warranty deed. Answer. A quitclaim deed transfers without warranty, whatever interest or title a grantor may have at the time the conveyance is made. Usually used by family members, divorcing spouses, and people well acquainted with each other. Question 5. The payment change date is A. The date when a new monthly payment amount takes effect on an adjustable rate mortgage or graduated payment mortgage. B. The date when a new monthly payment amount takes effect on an fixed rate mortgage or graduated payment mortgage. C. The date when a new monthly payment amount takes effect on an adjustable rate mortgage or balloon payment mortgage. D. The date when a new monthly payment amount takes effect on an fixed rate mortgage or balloon payment mortgage. Answer. A. The date when a new monthly payment amount takes effect on an adjustable rate mortgage or graduated payment mortgage is called the payment change date. Question 6. What is the definition of a note in terms of real estate? A. A legal document requiring a borrower to repay a mortgage loan at a stated interest rate during a specified period of time. V. A legal document requiring a signature by both buyers and sellers that allows for the transfer of real property. C. A legal document requiring a borrower to repay a portion of a mortgage loan at a stated time in a lump sum. D. None of these. Answer. A. A note in terms of real estate is a legal document requiring a borrower to repay a mortgage loan at a stated interest rate during a specified period of time. Question 7. The interest rate banks charge to their preferred customers is called A. The prime rate. B. The preferred rate. C. The priority rate. D. The graduated rate. Answer. A. The prime rate is the rate the banks charge their preferred customers for loans. Question 8. This is given by a commercial bank or other financial institution for a certain time and certain amount. A. Line of credit. B. Mortgage. C. Note. D. Bank account. Answer. A. A bank or other financial institution gives out a line of credit for a certain time period and for a certain amount. Question 9. This limits the amount the interest rate can increase or decrease over the life of the mortgage. A. A life cap. B. An interest limit. C. A mortgage cap. D. A fixed cap. Answer. A. A life cap limits the amount of change the interest rate can fluctuate over the life of a mortgage. Question 10. This is a type of ownership where individuals actually own the building or unit they live, but common areas are owned jointly with the other members of the development or association. A. Condominium. B. Planned unit development. C. Planned condominium development. D. Apartment conversion development. Answer. B. In a planned unit development, the individuals actually own the building or unit they live in, but the common areas are owned jointly with the other members of the development or association. Question 1. How many sections are in a township? A. 640. B. 280. C. 36. D. 20. Answer. C. There are 36 sections in a township. There are 640 acres in each section. Question 2. How many square feet are in an acre? A. 43,560. B. 23,040. C. 12,820. D. 64,640. Answer. A. There are 43,560 square feet in an acre. Question 3. When debts of a person are erased in bankruptcy, what is this called? A. Relinquish. B. Discharge. C. Closure. D. Erasure. Answer. B. The act of closing a bankruptcy case and releasing the principal from the debt is called discharge. Question 4. Financing costs usually rise on loans with A. Easy terms. B. Low down payment. C. Both of these. D. None of these. Answer. C. A loan with easy terms and low down payment must be secured, and this usually will raise financing costs. Question 5. If a neighborhood is only partially built and remains this way over a period of time, this could lead to A. Blighting. B. negligence. C. Breach of contract. D. None of these. Answer. A. A blighted area means an area that, in its present condition and use, substantially impairs or arrests the sound growth of the municipality, retards the provision of housing accommodations, or constitutes an economic or social liability, and is a menace to the public health, safety, morals, or welfare. Question 6. The broker loan law states that the broker's loan statement must contain estimated costs including A. Escrow. B. Appraisal. C. Title. D. All of these. Answer. D. The broker's loan statement must include, among other things, estimated costs including escrow, title, appraisal, notary, recording, and credit investigations. Question 7. The possessor of land in which an easement crosses cannot A. Terminate the easement at will. B. Use the easement. C. Remain as dominant. D. None of these. Answer. A. An easement cannot be terminated at the will of the dominant property owner. Something of this nature must be determined by the courts. Question 8. A licensed real estate broker that specializes in property management usually acquires commission based on A. A percentage of the gross rents collected. B. The life of the leases. C. The value life of the property. D. A percentage of yearly estimated leases. Answer. A. A licensed real estate broker specializing in property management usually earns commission based on a percentage of the gross rents collected. Question 9. An interest in real property can be obtained by A. Court order. B. Prescription. C. Verbal agreement. D. Notarized documents. Answer. B. Typically, an easement is an interest in real property and it is acquired by prescription. Question 10. A deposit that is given to a broker from an interested buyer that has had all deposit receipt conditions fulfilled should be given to whom if the buyer decides to back out? A. The buyer. B. The seller. C. A neutral third party. D. None of these. Answer. B. If all the deposit receipt conditions have been fulfilled, the deposit belongs to the seller. Question 1. A nonconforming loan is a loan in the amount over A. $147,000. B. $417,000. C. $500,000. D. $1 million. Answer. B. Fannie Mae and Freddie Mac's loan limits are any loan up to $417,000. Any loan over this limit is known as a nonconforming loan or jumbo loan. Fannie Mae and Freddie Mac's loan limits are any loan up to $417,000. Any loan over this limit is known as a nonconforming loan or jumbo loan. Question 2. The Government National Mortgage Association, that provides funds for government loans like FHA and VA, is also known as A. Ginnie Mae. B. Ginnie Mae. C. Freddie Mac. D. Fannie Mae. Answer. A. Ginnie Mae is the other name for the Government National Mortgage Association. It was created by Congress and provides funds for FHA and VA loans. Question 3. If a lender is issuing an FHA or VA loan, where does the funding originate? A. Ginnie Mae. B. Freddie Mac. C. Fannie Mae. D. From the lender. Answer. A. Ginnie Mae is the name for the Government National Mortgage Association. It provides funds for FHA and VA loans. Question 4. Ginnie Mae is owned by A. The government. B. The private stockholders. C. No one. It is a non-profit. D. None of these. Answer A. Ginnie Mae, or also called the Government National Mortgage Association, was created by Congress in 1968 as part of the Housing and Urban Development Act of 1968 and is owned by the federal government. Question 5. The Federal National Mortgage Association is also known as A. Ginnie Mae. B. Fannie Mae. C. Freddie Mac. D. Freddie Mae. Answer B. Fannie Mae is also called the Federal National Mortgage Association. Question 6. Fannie Mae is owned by A. Shareholders. B. Private entities. C. The government. D. None of these. Answer A. Fannie Mae is a shareholder-owned company. Question 7. The largest supplier of home mortgage funds is A. Ginnie Mae. B. Freddie Mac. C. Fannie Mae. D. Private lenders. Answer C. Fannie Mae, also called the Federal National Mortgage Association, is the largest supplier of home mortgage funds in the United States. Question 8. Which of these is a congressionally chartered organization? A. Fannie Mae. B. Freddie Mac. C. Ginnie Mae. D. Both Fannie Mae and Freddie Mac. Answer D. Both Fannie Mae and Freddie Mac are congressionally chartered organizations. They are not owned by the government but by shareholders. Ginnie Mae is fully owned by the government. Question 9. When a buyer gives earnest money to a broker, the money is then put into A. The broker's bank account. B. An escrow account. C. The seller's account. D. None of these. Answer B. The earnest money is placed in an escrow account until the transaction is closed. When the transaction is completed, the money is then delivered to the seller. Question 10. Which of these is considered to be an encumbrance? A. A lease. B. A mortgage. C. An easement. D. All of these. Answer D. A lease, mortgage, easement, or restriction is considered an encumbrance of a fee simple title. Question 1. Typically, a penalty that a borrower must pay if the payment is at least 15 days late on a first mortgage is best called A. A late charge. B. A delinquent payment fee. C. A fee in contract. D. A penalty in date. Answer A. A late charge is a penalty that a borrower must pay if the payment is at least 15 days late on a first mortgage. This time frame can vary, but the most typical is at least 15 days. Question 2. If Lucia was looking to come up with a down payment for her loan and she put forth the idea of using her 401k plan as a source for the down payment, this would be A. An acceptable source for a down payment. B. An unacceptable source for a down payment. C. An acceptable source for a down payment as long as penalties are paid prior. D. None of these. Answer A. A 401k plan is an acceptable source for a down payment for most types of loans. Most times, Pulling funds from a 401k plan prematurely will result in penalties. However, it is not required to pay these penalties in order to secure the down payment for a loan. Question 3. The best definition of a foreclosure is: A. The legal process by which a borrower in default under a mortgage is deprived of their interest in the mortgaged property. B. The legal process by which a borrower relinquishes interest in a real property whether in default or not. C. The legal process by which a borrower is evicted from real property in which they hold interest, even if only one payment is late. D. None of these. Answer: A. Foreclosure is best defined by the legal process by which a borrower in default is deprived of their interest in the mortgaged property. Question 4. A mortgage on a property that is considered to be the priority mortgage among any loans recorded against a property is best defined as: A. A primary mortgage. B. A first mortgage. C. An anterior mortgage. D. A premier mortgage. Answer: B. A mortgage that is considered to be the priority or first place mortgage among any loans recorded against a property is best defined as a first mortgage. Question 5. An income-based community lending model, under which mortgage insurers and Fannie Mae offer flexible underwriting guidelines to increase a low or moderate income family's buying power and to decrease the total amount of cash needed to purchase a home is called: A. Fannie Mae's Community Home Buyers Program. B. Freddie Mac's Community Home Buyers Program. C. Fannie Mae's Income-Based Home Buyers Program. D. Fannie Mae's Disadvantaged Borrowers Home Buyer Program. Answer: A. Fannie Mae's lending model that offers flexible underwriting guidelines to increase certain families' buying power and to decrease the total amount of cash needed to purchase a home is called Fannie Mae's Community Home Buyers Program. Question 6. In an exclusive listing, it gives the licensed real estate agent the exclusive right to sell a property. A. For a specified period of time. B. Indefinitely. C. Until the property is sold. D. Until the seller changes their mind. Answer: A. An exclusive listing allows for the licensed agent to have the exclusive right to sell the property for a specified period of time. It does not allow for an indefinite period of exclusivity. Question 7. This is a law requiring lenders and other creditors to make credit equally available without discrimination based on race, color, religion, national origin, age, sex, marital status, or receipt of income from public assistance programs. A. ECO. B. IACO. C. COA. D. None of these. Answer: A. The law that requires lenders and other creditors to make credit equally available without discrimination based on race, color, religion, national origin, age, sex, marital status, or receipt of income from public assistance programs is called the Equal Credit Opportunity Act, or ECO. Question 8. The term that is used in reference to FHA and VA loans and that are paid in addition to the 1% loan origination fee is called: A. Discount points. B. APR. C. Interest. D. None of these. Answer: A. Discount points are any points, money, paid in addition to the typical 1% loan origination fee. Discount points are usually associated with FHA or VA loans. Question 9. The most common definition of a creditor is: A. A person to whom money is owed. B. A person that owes money to another. C. An institution that originates loans. D. An institution that insures loans. Answer: A creditor is a person to whom money is owed. The creditee is a person that owes money to another. Question 10. In order for a real estate agent to determine the market value of a property, the agent would look at recent sales of properties with similar attributes, otherwise known as A. Comparables. B. Similars. C. Sames. D. Clones. Answer. A. Comparables, or comps, are the properties that are similar to the examined property that have sold recently. This gives the agent a good and fair determination of the current market value for the examined property.
Exam Scholar, Real Estate Edition.